Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model data cycle review for Monday the 15th to Friday the 19th of February 2021. This is like the sister video to the Flow weekly review, which we've done for the same period. And basically this is our version of the economic calendar, and this is how the data for each individual FX complex that we deal with, the 8 complexes, is faring in terms of its data cycle. Now we've made a start, so we're going to stop this as we go through each pair of complexes. But anyway, let's make a start then. We've got China data here, so we've got tier 1 and tier 2 data, and we've got the whole of January, and then we've got weeks 1, 2 and 3 of February. So week 1 is the 1st to the 5th, week 2 is the 8th to the 12th, and the last week, which is the week we're talking about, 15th to the 19th in trading terms. Right, so China then. January then, tier 1 -5, tier 2 +10. So in January we had a weekend, basically weak tier 1 data and fairly strong tier 2 data, and then we had neutral data to start off January in the first week, 0, and then a deterioration in the second week, -2, -4, and we've stayed static at this level of data. So China's data basically rolled off. Arguably tier 1 hasn't rolled off as much, but tier 2 data is certainly significantly rolled off. And what's been happening in China? Well, they've just had their lunar week off. They came back Friday, which was, what was it, the 19th. So they've had a whole week out of the game really. And Monday, this coming Monday, what will it be? I think it's the 22nd. They've got their rates decision. So that's China then. So the dollar. Right, so the dollar, and we'll tie all this stuff up at the end as well, but we'll just rattle through these as we go. So the dollar then, January tier 1 -5, and tier 2 was a very healthy +24. So you had mixed data, but pretty strong tier 2, has to be said. And then the first week of February, we got +1, +17. So we've got an improvement in tier 1. And we've got pretty solid tier 2 data for the dollar. And then in the second week, the 8th to the 12th, we've got a significant deterioration in tier 1 data and a relative deterioration in tier 2. So week 2 wasn't very clever from the data cycle perspective on the dollar. And then the last week then we just had 15th to 19th. We've got an improvement in tier 1, a relative improvement, +1, and we've got an improvement in tier 2. So the dollar's pretty much recovering in terms of data cycle now, and is on the up. So we'll talk about that at the end, as I said. So we'll stop this now and write up the next two. Right, welcome back. We've written up the German data and the EUR data as a block of the 27 countries. So start with the German data then. January was fairly positive. +4 on tier 1, +7 tier 2. Then in the first week of February, we've got tier 1 +2 and tier 2 -4. And second week, tier 1 steady, a deterioration in tier 2, -6. And the last week we've had +7, so significant improvement in tier 1 data for Germany, and a slight improvement in tier 2. So that gives you a situation then. So January was fairly strong, and then the first 2 weeks German data was steady to deteriorating, and in this last week, the third week of February, we've had a perk up in German data, marginally on the tier 2. Anyway, and over the block then, the Euro block, January -6 +5, so fairly mixed. -6 not so clever for the tier 1, +5 alright for the tier 2. First week of Feb, +10 +3, so significant improvement in tier 1, and a slight deterioration in tier 2, and then the second week we've got steady data at those levels, and this last week we've got an improvement in tier 1 to +13 and an improvement in tier 2 to +4, marginal improvement. So what can we say? Well, we can say that German data, which is arguably Germany is the engine of the block in terms of manufacturing. So January was pretty good. It deteriorated, and it's showing signs of coming up again now in the third week of February. And then January was mixed in the block, but then earlier, first 2 weeks of February this month, the tier 1 came up significantly and is held steady and is now pushing on a little bit. So that's the EUR situation. So stop there and move on to the next two. Right, back again. Yen this time, JPY and the pound, GBP. Start with the yen then. January, tier 1 pretty much neutral, 0. Tier 2 very healthy, +17. So good data for tier 2 on the yen. And then we've got pretty much 0 all the way down on tier 1 for the first 3 weeks of Feb, and we've got improvement week 1, 0, +2, +7. So the JPY complex from a data perspective is basically been neutral tier 1 all the way, but tier 2 is showing significant signs of improvement again. So January was pretty strong, so +17, and we're starting to swing up on February as well. So anyway, moving on then, the pound. January +3, +5. Remember that was linked in with claimant counts and unemployment, which were buoyed a little bit by the furlough scheme. But moving on from that then, tier 1 then we've gone 0, +2, +6. So we've got an increasing trend in tier 1 data, improvement for the pound, +2, +3, +6, and likewise for tier 2. So the pound, if you remember, we'll talk about this in a minute, but the pound has been pretty much the star of the show in terms of positive flows, so that maybe ties in a little bit with that. So stop it there, move on to the next pair. Right, welcome back. We're now on the CAD and the AUD, so the Canadian dollar and the Australian dollar. Start with the CAD then. January, tier 1 +8, tier 2 -1. So pretty strong CAD data on the tier 1 front, and only slightly weak on the tier 2. And then tier 1 we've gone -4, -4, -4 so far in February. So there's been a significant deterioration in tier 1 data, but it's steady. It's deteriorating but steady. And tier 2, we've got an improvement here, +2, +2, +7. So the tier 2 is showing signs of improvement. CAD, remember, quite often linked to the oil prices. Oil prices have been really steaming, and yet the CAD's been struggling, probably off the back of deteriorating economic data cycle. Right, AUD, January, tier 1 +2, tier 2 +6, so pretty good January for the AUD. Then we've got +3, +3, +2. So we've got improving tier 1 data and only slightly coming off in this last week. And tier 2, 0, +5, +3. So it started to improve up to the end of the second week, and it's tailed off slightly, but still positive. So the AUD, I'm bearing in mind that the AUD is quite linked with the China situation, and China's been off for a week. This could be quite laggy, So that's something to bear in mind. So we'll tie this up at the end. So anyway, stop that there. Last two coming up. Right, we're off again then. We've got the New Zealand dollar, NZD, the Swiss franc, the CHF. Right, start with the New Zealand dollar. January then, +2, -2, tier 1, positive, tier 2, negative, mixed. And then we've got an improvement in tier 1, +4, +4, +4, but it's steady, so it's plateaued. We've got minor improvement plateauing off. Tier 2, an improvement here certainly, +2, +6, and now a slight deterioration, well no, significant deterioration in tier 2, +6 to +1. Right, bear in mind that New Zealand dollar is severely pumped at the moment as a complex. It's about 65% above the model floor. It's the second strongest complex, with only the Swiss franc being above it. So something to bear in mind. Swiss franc then, tier 1, tier 2, 0 tier 1, -2 tier 2 for January. So fairly weak and lackluster in January. And the tier 1 is steady at neutral, 0 all the way. And we're seeing improvement now week by week in tier 2 Swiss data, +2, +4, +6. Now bear in mind, as I said, the Swiss franc is the strongest of all the 8 complexes at about 76% above the model floor. So there's not much elbow room for the Swiss franc, but it's showing creepingly improving data. Right, so bearing in mind what we're trying to do with this, then we're trying to link in the data cycles with the flow cycles of the complexes. And if you remember, this week we've had, which all this relates to pretty much, we've had the pound operating as the unopposed positive driver at +503, and the yen pretty much sucking out the bulk of the opposing flows at -366, and the dollar's been weak at -98, and the euro's been pretty solid at -39 as the rock. So that's the flows. So if we start dragging this out in a bit more detail, then so where are we? China then. So the takeaway from China is that the data, arguably the Chinese data on the data cycle, is deteriorating. That is one thing to say. There's a deterioration in the Chinese data, and we've got their rates decision on Monday, so something to bear in mind. Right, the dollar has been pretty much strong and is improving in terms of the data cycle. It had a little blip in the second week, but now it's come right back up again. So and bearing in mind that the dollar as a complex has been weak, and you look at the US 10-year year yields, the price of those has been falling and the yields have been coming up, so there's a sort of a diversity there, if you like, a conflict between a weak dollar and increasing 10-year yields. So that's the dollar. Germany had a strong January and then was deteriorating, and on the tier 1 it's improving, but on the tier 2 it's just about hanging in there. So slightly mixed to improving on Germany. And the Eurozone as a whole, that was mixed in January, and arguably it's showing quite a strong signs of improvement in the Eurozone. So particularly in the tier 1, which is way up to +13, which is pretty good. So the Eurozone has got a good tailwind to it. The yen basically tier 1 data neutral all the way, but tier 2 data has been consistently pumping away to the positive. So the yen's got good data, but it's obviously as a complex it's used. It's basically used as a carry trade currency, and therefore if stocks are screaming up, it's used as is borrowed against a higher yielding currency, and therefore this has depressed the overall yen complex, and arguably there's a big disconnect between yen data and the actual state of play on the complex, which is weak, and that's ultimately because of the way the yen is used in the financial markets. Right, so the pound then, the pound has been the star, as we said. It's been sucking in all these positive flows, and arguably the data cycle is medium to strong. Not mad strong, but medium to strong. So that gives you an idea. And the pound strength really comes from its positional thing. The pound is only about 27% above the model floor, and so it's had plenty of elbow room to come right up. So that probably explains that. The CAD then. The CAD has basically had a deteriorating tier 1 data cycle, and tier 2 is now starting to perk up a little bit, and arguably it could start to bounce off the back of these higher oil prices as they feed through to the Canadian economy. About 17 to 20% of the Canadian economy is linked with the oil trade, so that's something to bear in mind. And the AUD, normally on the up when equities are on the up, if it's viewed as a global growth story, and the AUD has basically week 2 last week was an improver, and it's started to come off a bit now. So the AUD has come off a bit. So that's put a spanner in the AUD pretty much. Now the New Zealand dollar. The New Zealand dollar has been outsized strong, really. It's punching way above its weight, and the New Zealand data has been steady at a higher level. It's starting to look quite mature in terms of tier 1. So we've had this rise, and now we're in this maturity phase on the data cycle, and we've had a significant deterioration in tier 2. And we're long the pound New Zealand, so we're short the New Zealand, if you like, and we think the action has just been lagged, and whilst we got a good pasting on Friday, to use the technical jargon, we do feel that the pound New Zealand has got plenty of upside. And the Swiss franc then. The Swiss franc has just been chipping away quite nicely on tier 2. It's just incrementally chinking up the data cycle. Tier 2, tier 1 is pretty much neutral all the way. But bear in mind the Swiss franc is rather peculiar in the sense that it's been pumped. It is the top of the 8 complexes. So elbow room is limited. So no matter what really happens to the data, it's got a tough job. So that's where we are really. That's linked in the data cycle, and we've tried to link in the complex flows a little bit with the sister video, and we're pretty much sort of up with the hunt now on terms of data cycle and flows. So I hope that's been useful to you. See you for Monday for the daily briefing. Thank you very much.